The stock market plunges on Powell's warnings. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Got my Stein in hand. I thought we'd have a look at this article from news.com.au because, well, the Wall Street market plunged last night after Jerome Powell's warnings about the economy. The Australian market hasn't opened at the time I'm recording this. We'll have to see how it responds. If we jump over here, we can see, there you go. There's the US market right there. Down, the Dow Jones is down to 23,247. S&P is down to 228.20. The dollar was sitting at 64 US cents. And I'll just look at my commodities. Gold has jumped up again on the news over to 17.16. We'll see if it can. Will it be able to breach that that top of 17.20.25 and sustain it? So the market's taken a hit. What did he say? How will it affect the Australian market when it opens? We'll have to see. Shares in the US have plunged after a dire warning from the Federal Reserve Chair Jerome Powell on growing concerns about the economy. Is anyone at all surprised? Maybe the Keynesians are. Maybe they actually think their behavior is good for the economy. Is that worse? Is that worse than legitimately trying to screw with everything? Is that worse, where they think they're doing good? I think that is. I think that is. U.S. stocks have fallen sharply after Federal Reserve Chair Jerome Powell warned about the threat of a prolonged recession. Now, we were talking in depending on how I release it, in other videos, the threat of a prolonged recession here in Australia. CBA is predicting a 30% house price fall. So there seems to be more and more people are discussing or just mentioning a prolonged recession. And I think it will happen on a global scale. And I think Australia is going to be very vulnerable to it. And I think there are a whole lot of, boomer property experts that are going to realize they were just taken along for the ride. Everyone's a genius when the market's going up, isn't it? What happened to all those crypto spruikers 2017 that were constantly creating YouTube videos after YouTube videos about it going up, making these predictions. This altcoin will be at $5. This will be at that. It's all based on absolutely nothing and all gone now. But they were experts then. Yeah. So the ASX is set to follow Wall Street into the red today as global markets take fright from the bleak outlook. Mr. Powell said that the United States was in the midst of the biggest shock our economy has felt in modern times and probably will face an extended period of weakness. So if we have a look here in Australia, guys, we can see consumer sentiment is down. Now, what do you think a statement like that would do from the Reserve Chair, the Chair of the Reserve Bank, would do to their consumer sentiment? What would it do to their business confidence? Because a lot of it is positive speak. That's Trump's a marketer. That's what he does. And what do you think the potential of an extended downturn in the US will have for Australia? What will it have for China? They've got the trade war there with the US and China. Less demand for goods from China. Less demand for resources from Australia. Less Chinese students coming over to our university education or our tourism sector. Then there'll be less demand from Japan as well because they're a trading partner with China. It all flows through, guys. Less from South Korea, less from Taiwan, less from Hong Kong. But don't worry, our Prime Minister has got the trade bubble with New Zealand. I'm sure we'll be fine. Sorry to all my New Zealand viewers. I love New Zealand. I love the cheese. This morning, Wall Street was falling towards a second straight day of sharp losses, weighed down by worries about a slow recovery from the US economy. The S&P was down 2.1% as of 3 p.m. US Eastern Standard Time, with the sharpest losses hitting stocks that most needed a healthy economy for their profits to grow. The Dow Jones industry average was down 567 points, or 2.4%, to 23,194, so it's gone up slightly since then. And the Nasdaq Composite was down 2.2%. Treasury yields were also lower in another sign of pessimism after Federal Reserve Chair Jerome Powell warned about the threat of prolonged recession. He said the US government may need to pump even more aid into the economy, which is bleeding millions of jobs every week as collateral damage in the battle against the pandemic. Now, here's the thing, guys. Here's the thing. There are people in the States that don't want to go back to work anymore. They want to take advantage of the free money that is given to them, which makes a lot of sense. So here we have just pumping more money into the economy. What happens when you pump more and more money into the economy? MMT magic says we don't need to worry. They'll tax it away. Other people are more concerned that we've got the potential for hyperinflation. So, but then again, we may have deflation beforehand. Isn't that the story? Because, I mean, spending has gone down. You can see it. Savings rates are shooting up in the US. Here in Australia, credit card applications are down. People are pulling their horns in there, tightening up. How's your spending going, everyone? Are you tightening up too? I bloody well am. The market has been wavering the last couple of weeks after coming off its best month in a generation, as optimism about reopening the economy collides with worries about the dangers of lifting restrictions too soon. At this stage now, we think there are more risks to the downside than the upside, says Liz Ann Saunders, Chief Investment Strategist at Charles Schwab. Customers in general are going to be more wary and more interested in boosting savings rates and are unlikely to come back to a world of consumption anywhere near where it looked like before, she said. Exactly. That's changing consumer behaviors, changing habits. We're seeing this here in Australia. We're seeing this just in more people buying off-brand items, not the posh ones. They're going to Aldi or Costco, even though Costco isn't cheaper. Worries that the economic recovery may not be as strong or as rapid as investors had been banking on just a week ago hit oil companies and banks particularly hard. Energy producers in the S&P 500 fell 4.8% for the biggest loss among the 11 sectors that make up the index. Financial stocks were close behind with a 3.2% loss. Those two areas of the market have been some of the year's biggest losers this year on expectations for less demand for oil and lower profits from making loans. And China tensions. Worries about a resumption in trade tensions between the US and China are also weighing on markets around the world recently. On Tuesday, the top US infectious disease expert, Dr. Anthony Fauci, warned that if the economy reopens too soon, it could cause a backtrack in the road to try to get the economic recovery. In China, where the pandemic first surfaced, authorities announced 7 new cases on Wednesday. 6 were in Jilin province in the northeast, where alert levels were raised and rail connections suspended. South Korea reported 26 additional cases of the pandemic over the past 24 hours. In Asian stock markets, Japan Nikkei 225 slipped 0.5%. The Hang Seng in Hong Kong lost 0.3%. South Korea's Kospi rose 0.9%. In Europe, the DAX lost 2.6%. The France's CAC 40 dropped 2.9%. FTSE 100 lost 1.5%. The yield on 10-year Treasury bonds fell to 0.64% from 0.69%. So there you go, guys. There you go. So the market in the US, well, that confidence that was coming back has taken what appears to be a bit of a hit. We can see it going down. We can see the S&P going down. I mean, it seems to be, all over the place at the moment, doesn't it? Up, down, up, down, up, down, up, down. Oh, potential reopening. It's good. Everyone, pile back into the market. Oh, no, potential reality. Oh, we'll have to close. Everyone pile out. Everyone pile out. The fact that they're arguing for more support, more money, more printing into the economy, more QA, more repo. More QE, more repo. That's the concern. More stimulus, more handouts. It's definitely going to be an interesting time, everyone. How do you think the Australian market will respond? Let's have a look at the ASX 200. And there you go. We're still down from the peak of 7,000. We'll have to see. Maybe it'll be another slight adjustment. Seems to be 1 to 2% moves a day. Just seem to be what's happening now because the market is all over the place. Anyway, please let me know your thoughts and opinions in the comments below. Thank you for watching. Like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join us on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time.